In recent years, money market funds have gained popularity among investors seeking a balance between safety, liquidity, and modest returns. And while yields have come down a little, money market funds still remain a solid option, especially for people who can't fulfill the criteria for high-interest savings accounts like retirees, freelancers, students, or anyone who simply prefers not to lock up their cash for months at a time. In this video, I'll be going through everything you need to know about money market funds, what they are, how they work, what their risks are, and of course, which is the best money market fund you should go for. So, first things first, what is a money market fund? To put it simply, a money market fund is a type of mutual fund that invests in short-term, high-quality debt instruments and cash equivalent securities. In Singapore's context, these will be your Singapore government T-bills, MAS bills, certificate of deposits, commercial papers, and bank fixed deposits. The main goal of a money market fund is to preserve capital while providing modest and stable returns. But how modest and how stable are we talking about? Quick pause. If you are looking for the best brokers to kickstart your investing journey, check out Interactive Brokers. You will enjoy one of the lowest fees in the industry at just 35 cents per trade on the US stock market. It also offers Ireland domiciled ETFs, perfect for saving on dividend withholding taxes. Plus, it also comes with free company research tools, so you can make smarter investing decisions. Feel free to use my Interactive Brokers link to open an account and start investing today. Alright, let's get back to the video. Currently, money market funds are offering a 7-day annualized yield of around 1.7% to 2.2% return. This closely matches what's currently being offered by many high-yield savings accounts, especially the ones that don't require you to meet any salary crediting or spending criteria. At the same time, they've also demonstrated their resilience even during periods of market stress. For example, during the 2020 COVID-19 crash and the sharp interest rate hike in 2022, when bond prices were swinging wildly, money market funds continued to provide steady returns. This makes them an attractive option for investors who want to park their cash safely in the short term while still earning a decent return. Also, note that most money market funds in Singapore do not pay out dividends. Instead, they accumulate and reinvest the interest earned. So over time, you will see the net asset value steady from PP going up. Now, just because money market funds are resilient and offer stable returns doesn't mean they are entirely risk-free. Given that money market funds are considered as investment products, they are neither capital guaranteed nor protected by SDIC, and in rare but extreme circumstances, they can even experience negative returns. One well-known example occurred during the 2008 financial crisis, when the reserve primary fund in the US broke the buck. This means its net asset value, which is usually maintained at $1, fell below that mark after suffering losses from its exposure to Lehman Brothers debt. The drop in NAV triggered widespread panic and mass withdrawals across the industry. Another notable incident occurred in March 2020 during the peak of COVID-19 market panic. Several US money market funds faced severe liquidity stress as investors rushed to redeem their holdings. The panic was so severe that the Federal Reserve had to step in with emergency liquidity measures to prevent a broader financial crisis in the short-term funding markets. While Singapore's money market fund has remained stable thus far, these events highlight the fact that no investment, not even low-risk money market funds, are entirely without risk. That said, with proper understanding and due diligence, money market funds can still play a valuable role in an investor's portfolio, especially for managing short-term cash needs while earning a modest returns. Here, we have 7 of the most popular money market funds in Singapore. In general, they can be grouped into 3 different types, depending on their objective and liquidity features. First, you have the traditional money market funds. They are the Fullerton SGD Cash Fund, Lion Global SGD Money Market Fund, and United SGD Money Market Fund. Their objective is straightforward. They aim to preserve capital while providing modest returns by investing in high-quality short-term debt instruments. This makes them a popular choice for low-risk short-term cash management. Second, same-day liquidity funds. Most money market funds require 1 to 4 business days for redemption. However, same-day liquidity funds such as the Fullerton SGD Liquidity Fund and Phillip Money Market Fund are designed for investors who need near-instant access to their cash. These funds typically offer lower yields compared to traditional money market funds, but in exchange, they prioritize safety and quick accessibility, making them ideal for emergency needs or transactional purposes. Lastly, enhanced return funds. These funds usually include the word enhance in their names, such as the Lion Global SGD Enhanced Liquidity Fund and the iFast SGD Enhanced Liquidity Fund. They aim for higher yields by taking on slightly more risk, often through exposure to longer dated or corporate instruments. While still considered relatively low risk, they may not offer same-day liquidity and are better suited for short to medium-term parking of idle cash. So then, which should you go for? It really depends on your needs. First, if you are using a low-cost broker to invest, chances are your idle cash will be parked in a money market fund to help you earn some yield while you wait. For instance, Momo SG automatically parks your idle funds in one of the Fullerton money market funds. Webull offers access to the Fullerton SGD cash fund, while Tiger Brokers provides a selection of money market funds that you can choose from based on your risk preference. Though, just make sure to turn on the auto sweep feature so that your idle cash is automatically invested instead of sitting around doing nothing like a lazy bum. The benefit of doing so is that when you are ready to invest, you can instantly redeem the funds and deploy the capital without delay. So you get the best of both worlds, where you get to earn a yield while waiting and maintain flexibility when it is time to invest. Second, if quick access to your funds is a priority, then you might want to consider money market funds that offer same-day liquidity, such as the Fullerton SGD Liquidity Fund or the Philip Money Market Fund. Depending on the fund, as long as you redeem them before the cut-off time, you will typically receive your money by the end of the day. Apart from money market funds, platforms like Wise and Mari Invest Save Plus also offer liquidity programs that allow daily instant withdrawals up to a certain limit. But you know I know lah, these instant redemptions aren't 100% guaranteed. They depend on the available liquidity and may not always come through when demand spikes. So if you are relying on instant access, it's a good idea to diversify across multiple platforms. That way, you reduce the risk of your funds being stuck when you need them the most. Lastly, if your goal is to earn the highest possible yield, you may want to consider money market funds that offer higher returns or even look beyond standalone money market funds. Some Robo Advisors enhance returns by combining multiple money market or short-term instruments into a portfolio. For example, the Lion Global SGD Money Market Fund has a 7-day yield of around 2.2%, but Safe Cash Plus Flexi, which hosts this fund, currently offers a projected yield of 2.5% per annum. Similarly, Stash Away Simple, Endowus Cash Plus, and UOBAM Cash Plus Extra build portfolios using a mix of money market funds and other funds to potentially deliver better returns. Of course, higher yield comes with slightly higher risk. For instance, Endowus Cash Smart Secure, which combines 50% Fullerton SGD Cash Fund and 50% Lion Global SGD Enhanced Liquidity Fund, has experienced a historical maximum drawdown of 0.05%. So if you decide to use these higher yielding portfolios, be sure you are comfortable with some level of short-term volatility, yeah? Bonus tip: if you are new to Longbridge, they are currently running a 12% interest booster promo. When you sign up using my referral link and deposit a cumulative amount of $2,000, you will enjoy a 12% interest on your money market fund holdings for 90 days, along with other welcome rewards. So that was a quick video on the best money market funds that you can invest in. Hope you found it useful. Like, share and subscribe, as I'll be posting new videos every week.